SoftBank Group has agreed to acquire DigitalBridge Group in an all-cash deal valued at approximately $4 billion, offering 16 per share. So the question is, what does this acquisition mean for SoftBank's AI infrastructure ambitions? And how will DigitalBridge's role evolve after the transaction? Let's solve this equation. Welcome back, strategists. This is the Resource Equation, your briefing room where data, capital, and strategy collide. New here? Subscribe for weekly breakdowns of what's really moving markets. On December 29, 2025, SoftBank Group Corp., a major Japanese investment holding company, announced a definitive agreement to acquire DigitalBridge Group, Inc., a leading global alternative asset manager specializing in digital infrastructure. The deal values DigitalBridge at around $4 billion in enterprise value, with SoftBank offering $16 per share in cash. This price represents a 15% premium to DigitalBridge's closing price on December 26, 2025, and a 50% premium to the unaffected 52-week average closing price as of December 4, 2025. DigitalBridge, headquartered in Boca Raton, Florida, manages approximately $108 billion in digital infrastructure assets, including data centers, cell towers, fiber networks, and edge infrastructure. The company operates an asset-light model, managing capital on behalf of institutional investors and generating revenue through management and performance fees. It focuses on 5 key pillars of digital infrastructure that support hyperscale technology companies such as Amazon, Google, and Microsoft. SoftBank Group's stated mission is to realize artificial superintelligence, or ASI, which requires not only advances in AI models but also scalable infrastructure to train and deploy these models globally. According to Masayoshi Son, chairman and CEO of SoftBank Group, acquiring DigitalBridge will enhance SoftBank's ability to build and finance the foundational infrastructure needed for next-generation AI services, including expanding data center capacity and improving connectivity. Here's where it gets interesting. DigitalBridge will continue to operate as a separately managed platform under its current CEO, Marc Ganzi, who is recognized as a pioneer in digital infrastructure investment. Ganzi highlighted that SoftBank shares a long-term investment mindset focused on scaling transformational digital infrastructure, which is critical as AI demands more compute power, connectivity, and energy. 3 numbers tell the story. First, DigitalBridge manages $108 billion in infrastructure assets. Second, the acquisition price of $16 per share reflects a 15% premium to recent trading prices. And here's the kicker. The transaction is expected to close in the second half of 2026, pending customary regulatory approvals. Surface level, this acquisition is a strategic move by SoftBank to secure critical AI infrastructure amid a rapidly growing market. But dig deeper, and it reflects a broader shift in how technology companies are investing in the physical backbone of AI deployment: data centers, fiber networks, and edge computing facilities. DigitalBridge's portfolio includes what some call AI factories, specialized data centers optimized for AI workloads, which have gained importance as AI applications scale. Pause here. Does this make sense? Drop your take in the comments. DigitalBridge's transformation from a diversified real estate investment trust into a focused digital infrastructure manager has been significant. Formerly Colony Capital, it rebranded and shifted its core business starting in 2019 under CEO Marc Ganzi's leadership. The company divested legacy assets and concentrated on digital infrastructure, achieving $40.7 billion in fee-earning equity under management by Q3 2025, exceeding its targets ahead of schedule. Fee-related revenue grew 22% year-over-year to $93.5 million in the same quarter, with margins expanding to a record 40%. This financial strength and operational focus made DigitalBridge an attractive partner for SoftBank, which has been investing heavily in AI and related technologies through its vision funds and other holdings. The acquisition aligns with SoftBank's longer-term strategy of becoming a leading platform provider for artificial superintelligence. Now here's the number that changes everything. DigitalBridge's data center portfolio companies, such as Vantage Data Centers and Switch, reported leasing 2.6 gigawatts of power capacity in 2005, driven almost entirely by AI training and inference workloads. This power capacity is crucial, as AI models require substantial electricity, and securing reliable power has become a competitive advantage in the sector. Remember that question about how DigitalBridge's role will evolve post-acquisition? We're getting closer. Despite the acquisition, DigitalBridge will operate independently, maintaining its management team and strategic focus. The transaction was unanimously recommended by a special committee of DigitalBridge's independent board members and approved by the full board, reflecting broad institutional support. Real talk. What's your hypothesis on why SoftBank chose DigitalBridge instead of building its own infrastructure platform from scratch? Back to our opening question. Here's what we now know. SoftBank aims to accelerate its AI infrastructure capabilities by acquiring a leading specialist with a global footprint and deep sector expertise. DigitalBridge's asset-light capital management model complements SoftBank's investment approach, allowing for scalable financing and operation of critical infrastructure assets. However, the exact details of integration and operational changes remain to be seen, pending regulatory review and closing. What comes next? The transaction is subject to customary closing conditions, including regulatory approvals and shareholder votes. These steps are expected in the second half of 2026. Investors and stakeholders will be watching for updates on the merger process, as well as any potential regulatory concerns given the strategic importance of digital infrastructure. How do you interpret this acquisition in the context of the broader AI infrastructure race? Who gets affected most by this consolidation of digital infrastructure assets? What signals are you watching as SoftBank expands its platform? Let me know in the comments. And if you found this valuable, hit that like button. But here's what most people are missing while this plays out. This acquisition connects directly to a bigger equation we covered recently. NVIDIA's $20 billion deal with Grok for AI chip licensing and executive hiring is reshaping the AI hardware landscape. If this story caught your attention, you need to see what we uncovered there. Link in the description. Watch it next. Subscribe to the Resource Equation for weekly breakdowns like this. Next up, how semiconductor supply chains are adapting to AI demand. See you in the next one. Quick reminder, this video reports and explains public information. It does not offer investment advice.